Good morning, good morning. It's a lovely Thursday morning, and today is I believe it's the 18th day. Yeah, it's the 18th day of 22 of June 2026, and this is what we were looking at yesterday. This was our analysis for yesterday. This was yesterday morning. We were looking. I remember saying this would be a high risk buy above this level. So, and this was the target. This was the target here. So whoever caught this buy, it was high risk, but it still played out. So if you had the risk appetite for it, I believe you hit take profit here at 2R 2.14. Entry was here, stop loss just below this structure that was broken here. For the high risk sales, we are looking for sales below this level. I remember telling you this would be a no trade zone for me. And true to that, I didn't take any trade within this level. My alerts were here and here. Okay. So once price hit this level here at 8:30, this was the just pre-FOMC, pre-FOMC, FOMC pressures. Yeah, the pre-FOMC pressures. There was this. This is just like a sweep of liquidity above here. Then at exactly 9 p.m. is where the market sold from. The market sold from here all the way down here. So this was yesterday's analysis. We never took a trade according to this analysis. And I only took a trade during the FOMC here. Let me show you how I took that trade, the FOMC trade. Uh, Let me show you how I did it. So this is how I took the FOMC trade. Yeah, I've tried playing it back. It's not going to that analysis, but I had taken a screenshot at 9:30 yesterday, 9:30 p.m. Okay, and this is how I took the FOMC. I had set my buy stop limit here. My buy stop limit was above here. Stop loss just below here. To take the market all the way up here. The buys were not activated. My sell stop limit was here. Stop loss just above here, above this structure here. The stop loss was above here. Sell stop limit here, stop loss here. Targeted this. There was this gap here. This gap here. This is a screenshot. So there was the gap here the gap that was left as the market opened on Monday morning. Yeah. So this was my target here, and it hit the target within the first candle, the first 15-minute candle, and we had taken profit. Okay. So that's how you trade the news. That's how you trade the news. That's how you trade the fundamentals. I remember telling you I was going to trade the FOMC. I was targeting this one here. This was my target here. 15 minutes. Let me show you. Yeah, this was my target here. I was targeting this gap. Targeting this gap. Sell stop here. Stop loss just or somewhere around here. And then take profit here. We hit take profit within the first 15-minute candle. Market pushed up to retest these levels again, then pushed down all the way, covering this gap that filling this gap. It filled this gap that was left on Monday morning. At some point, we all knew that this gap was going to be filled. The question was just when. Okay, the question was just when it was going to be filled, and this happened yesterday. Immediately the gap was filled, market reversed, pulled back, the market pulled back, and now we're in this consolidation here. So real quick, let's do our analysis for today. Let's do our analysis for today and see what you can get today. So yeah, what we do is we remove everything. remove all drawings. And something I've forgotten to tell you about the FOMC, the rates were unchanged. The FOMC, Kevin Wash and his team decided to hold the rates unchanged. So let's see. So the rates are still 3.75. He said inflation was well ahead the 2% goal. Okay, so they didn't see the need. So let me show you the news here. Yeah, the interest rates came in. The forecast was 3.75. The forecast was 3.75, and the actual came in at 3.75. So nothing changed. Okay, uh, that's what happened yesterday on the FOMC. So today, real quick, and we're gonna see what we have on. Today is Thursday. Do you have any fundamentals on Thursday? On Thursday, nothing on the USD. Nothing on the USD. GBP monetary policy summary today at 2 p.m. If you trade the GBP pairs, watch out for today at 2 p.m. If you trade the Swiss franc pairs, today at 10:30 p.m. The monetary policy assessment is for the rates. Also for the rates on GBP, it's today, and I think that's all to expect. The New Zealand dollar also, the New Zealand dollar, the GDP, and claimant count change coming out today. So nothing high impact on the USD. So today we can trade without fear, unless we get breaking news from Trump or Iran. Okay, so let's see. Let's see what do we have today. Start our analysis from the 1 month as always. Higher time frame 1 month down to 30 minutes. So that's what we have there. That's the resistance there. Then you have the support here. You have that support there. Don't know why this one is looking here. The Federal Reserve holds rates and no. So that's what you have on the monthly. Jump down to the weekly. On the weekly, you're looking at this resistance here and this support down here. That is our weekly. Remember, we also have this one to look out for, the swing high. The swing high here, I broke the structure. Jump down to the daily. And the daily still at the same still at the same levels. We have this high here, still it has not been broken, and we have this low here. still same levels. So jump down to 4 hours. On 4 hours, what are we looking at? On 4 hours, we had this low here. Once this one was broken, once the structure was broken, and then another break of BOS here, they had a market shift here. Once the shift happened, and we had this internal low here, and this internal low here, it has not been broken yet, and then we had this high here. So for today, yeah, let's still have that high there. So we move that to the body there. It's at the body. We move it to the body here. Move it to that body there. And there to the body there. So take note of these wicks here. It's important to just mark them because they are very important. Is where liquidity lies. Liquidity lies below here and above here. So jump down to 1 hour. On 1 hour now, this is what you're looking at here. On 1 hour, we had this high here. So allow me to move this one now here. You can remove this one and move this one here. So we have that high there. There was this break of structure here. That was the first BOS. Then there was another BOS here. Then another one here. There's the last break of structure here. So once this structure was broken and the high was here and the low here, this was the high, this was the low. We had another break of structure yesterday and the low was here. And once the market the FOMC data came out, we had this shift. The market shifted here, and now our 1 hour low is here. Okay, that's how you analyze market structure. So our 1 hour low is here. This is where we have our 1 hour low and our 1 hour high. Okay, so from there we jump down to 30 minutes. On 30 minutes we have we're still within this range because there was this break of structure here. Market shifted here, so the high, the low, but internally we have this. Internally we have this resistance here. There's this resistance up here, and then there's this up or down here where the market has been struggling to break. There's this up or down here. The market has been struggling to you can see there has been consolidation around here. This is the okay, something I need to check on. So this is the 8 a.m. candle, 8:30 a.m. candle that has been trying to break below here, and you can see. Let's jump down to 15 minutes for a clear picture of that. You can see. and this is what we have on 15 minutes. So on 15 minutes, if I were to trade this, is what I'd be looking for. Now I'll be looking for a break above this level here. Or a break below this level here. Which has already happened. So these are potential sales. Potential sales below. And these are potential buys above. The potential buys above, potential sells below. So here you could have a sell limit here. You could have a sell limit here, waiting for price to tap into this level, retest this level here. Sell limit there. Stop loss there. And I take profit here. Levels to watch out for. Price could react on this level here. Remember, there's this fair value gap here, also worth noting. Price could react here or even here. Okay, so these are the levels I would be looking out for price to react from. Actually, my stop loss would be just be above here or here. That's where I would set my stop loss, just above the structure here. Okay. That is for the sell. For the buys, but if you made some good profit yesterday, you don't have to trade every day. You can stay out of the market today. For the buys, this is what I'll be looking for. So remember guys, trade what you see, not what you think. Happy hunting. And risk management is always key. Risk management is always key. So yeah, we target this high that was made by the FOMC candle yesterday, or this low that was made by the FOMC here. That's my targets for today. Okay, so remember, trade what you see, not what you think. Keep your emotions out of the market. The market doesn't owe you anything. And yeah, happy hunting. See you tomorrow for a recap of the same. Ciao. I'm out.